Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Today is October 28th, 2025. My name is Aaron Edwards with Santos Springs. And wow, we're right out of the chute this week with some friendly headlines. The main one is Trump is in China, or he's in Asia trying to negotiate friendly deals with multiple nations, but obviously the attention is on China. We also have some delays in planting in Brazil, and soybean market at least is reacting in a friendly way. We'll go over all that, but first, the recommendations. I've already reached out to you, so this shouldn't be news, but we'll talk about the recommendations and we'll go over the thought process behind them. Sell 50% of quarter 4 soybeans and sell 25% of quarter 1 soybeans. That's the recommendation for this week. I do want to kind of walk you through the thought process behind those recommendations. So let me get this pulled up here. Unfortunately, we still don't have the commitment of traders reports, but let's look at planting and let's look at some technical analysis here. Planting in Brazil. Let me grab a marker here. Let's go with blue here to get a little contrast. So this is all in Portuguese. Don't worry, you don't need to learn Portuguese. These 12 states represent 96% of the planted area. Down here is the big number we need to pay attention to. Brazil's 34.4% planted. Historic average for this week would be 42.5. So Brazil is behind planting pace. If we want to just take rounded numbers, they're off pace by about 8% behind planting rate. There's another important number, which is, if you know, I always talk about ballpark for double crop corn. They have to get to that 30% planted by the end of October, and they did hit that mark. So planting, they are 34% planted, but they are 8 percentage points behind the historic average. What states are where is that delay really showing up? I want to point out a few. This one, a third of Brazil's soybeans are in this state alone, Mato Grosso. They're 10 percentage points behind. Mato Grosso do Sul, just to the south of that state, is also 10 percentage points behind. Goiás is almost 20 percentage points behind. Paraná is only 3%. That's not that bad. São Paulo, which isn't as big, 10 percentage points. Santa Catarina, 11 percentage points. This basically the central part of Brazil. This is kind of that Cerrado, that central region. That's where we're really seeing most of the delays, is in this area right here. And
this combined area, I'd have to tally it up, but these states together probably are pretty close to 50%, between 40 and 50% they're probably over 50% of all of Brazil's soybeans, and that's where the delays are coming from. We do have some delays up in here. Well, actually, the Northeast expansion region, on a whole, it's actually not really all that delayed because they're way ahead in the state of Bahia. So that's, that northeastern expansion area, they start planting later. They're doing okay. I won't show a rain forecast map, but I do think it's important. There's a few regions that, like Argentina, that Mato Piba region, northeastern expansion region in Brazil, where if you look at the forecasted accumulated rainfall for the month of November, it's low. So if that rain happens to be, assuming that forecast comes true, if that happens to be spaced out nicely throughout the month, it might not be a bullish story, but there could be a bullish story. So most official estimates for Brazil have not cut back any crop production, but there's a few key areas that there's the possibility, like there always is, right? But there's a few key areas where, depending on the distribution of the rainfall, they are expected to be on the drier side. Northeastern Brazil, parts of southern Brazil, Argentina and Paraguay, parts of them. So there could be a weather story. Right now, the story that we have is delayed planting. As is always the case, our philosophy is build a market plan portfolio. Based on that market plan portfolio, then the recommendations are tailored to each operation. That's where the seasonals come in, the funds, the technicals. That's what we look at. And we're flying blind here without the position of the funds. The government's shut down, and I think this is going on week 4 that we don't have that COT report. The last report was basically a month ago, end of September. So we're kind of flying blind. We don't know what the speculators are doing, but seasonals, technicals, and the funds, that gives us that call to action. So without the position of the funds, let's drill into some technical analysis. Let me go ahead and share this, get this marked up. We're going to start with January soybeans, and I'm going to get a black marker. This image there, there we go, black. There we go. This image is probably the most important one we're going to look over today. Let me just point out what happened. So Monday, we gapped up. We left a gap on the chart when we opened up on Monday, and it went on the January contract. We went from basically 1070 all the way up to 1110-ish. Just absolutely, 40-cent rally in 2 sessions. Also, it's important to just put that into perspective. The last time we were at these price levels on that January contract was basically a year ago. And so the big question, are we finally going to get that rally we've been waiting for? Or is this the opportunity that we need to capitalize on because prices are going to be pressured? Let's just talk through that a little bit, and you'll get to my opinion here. I think you'll be able to figure out what my thoughts are on it pretty quick. But first, let's start with what happened last year. We had this rally it was either September or October, right? Right, probably 11 months ago. And what happened after that rally? By basically right around Christmas, we were trading under $10. So we went from $11.10 to $9.80. That was a $1.30 drop over the course of October, November, probably not even 3 months. About 2-3 months, we dropped $1.30. That's what happened last year. Then from that low, we never got back up to the highs until this week, but we also never came back down to those lows. That's how we traded throughout all of 2025 until this week. We were in just range bound. So the big question up in here, which is where we are right now, what do you do? Are we finally getting out of that range? Are we going to $11.50? Are we going to $12? Or is this going to be a head fake? Even though we don't have the position of the funds, let's try to figure out who's buying this, what made this spike, who's buying it, and why. There's dryness in Brazil. There is a possibility of a shorter crop. So there's dryness in Brazil. Trump is in Asia trying to work out a China headline. This is basically a China trade deal. This is basically the first time we've had bullish, genuinely bullish headlines in about a year for soybeans. What's going to happen? We don't know, but probably soybean planting will get caught up in Brazil. And even if there is a trade deal, maybe it's a buy the rumor, sell the fact. Not to mention, technically, we have a very large gap down here, and that gap's at 1060. So if we are going to have a sustained rally upward, it seems to me for that to be a healthier rally, my opinion is that this should come down and it should find support. Where would it find that support? This 20-day moving average going up. So if we get that 20-day moving average coming up, fill in that gap, and then we can stay in an uptrend, then I think those higher prices, more prolonged high prices, that's possible, that's exciting, that's something we can be happy with, excited about. Right now, I feel this is it looks to me like as of this week, this is a buy the rumor, sell the fact type of an opportunity. This is the type of opportunity that we sell into. And you know the recommendation, I'm not saying bet the farm on it, but between now and the end of the year, let's go for it. And let's if you follow the sales instruction, let me just paint a picture. Let's just go back a year and let's look at this rally, right? At this rally, if you had sold 50% of your quarter four volume of quarter four, and then 25% of your quarter one, which is what was recommended, what would happen? All right, your quarter one, that goes all the way to April, right? So you would have sold half of this, so then, comes down, let's say maybe we sold another part there. So your average sales price would be high tens if we did that, right? And then on the 25%, you would have sold it up here. And then when this comes back up, you could sell another chunk here and 75% there. So again, your average sales price would be close to basically the best the market had to offer. My thought is this is a rally that should be sold into. The thing with speculative rallies is, and between yesterday and today makes this point better than markets. If it's speculators, they can be finicky. We can get a friendly headline. We could go tap 130. We could go our 1130. We could go tap 1150. That could happen, or it could be right down to 1060 before you know it. All that's to say, with what we know today, this seems like a headline, buy the rumor, sell the fact type of a rally, and selling into it makes sense. Let's say that you sell into it, but you're still really bullish, and this thing comes up, this trades back down. We can always re-own it in here if we want to, if it's looking like that's going to turn around, and good, you're right back in the game. So that's my 2 cents on that. Now let's look at corn. Corn's not quite as exciting from a adrenaline rush standpoint, but I'm pretty optimistic about this corn market, and I'll tell you why. We'll keep the blue there. So this 20-day moving average, assuming that keeps going up, this 200-day moving average comes down, we almost tapped resistance. Now probably we'll trade down here. But if we could stay in this wedge and stay up, man, finally we can maybe start looking at some price levels. This is March corn. This was a big value area for corn for a long time. And if I had to guess, we're probably heading back into that value area between now and the end of the year. So I'm somewhat friendly on the corn, not corn to the moon, but corn in the mid fours. That seems very possible. I mean, 445, I know we're kind of there to some extent, but I'm saying, between 450 and maybe 470, corn in those price ranges does not seem like a tall order with what we have. In a nutshell, this is an opportunity to sell beans, and the farmer optimism about prices, I don't think it's misguided with the corn market. We typically recover after harvest, and I think that's very likely going to happen again this year. Just to wrap it all up, let me share the screen here and let's just get our summary. So seasonally, it is still a buy for corn. It is a buy for soybeans seasonally. Managed money, we do not know because we don't have the commitment of trader reports. So we don't know what they're doing. The trend for beans, trend for beans way into an uptrend, and for corn also, it's an uptrend. Domestically and internationally, basis levels have primarily held for soybeans that are readily available, but in some areas we have seen them fall with this week's rally. For what it's worth, new crop basis in Brazil absolutely got destroyed with this week's soybean rally. Though soybeans popped nicely, they left a big gap that likely will get filled. Corn is well supported at the 20-day moving average for now, but hasn't had the strength to break through the 200-day moving average. I'm cautiously optimistic that corn may have nice upside potential if we can, in fact, get up over the 200-day moving average. Quite an adrenaline rush week here with the beans popping. Sell beans, hold corn, and let's hope for higher prices across the board on everything for the rest of the week and going into next week. And we can always sell more, but for the time being, let's make sure we're getting our work done that we need to get done. Hope you have a great rest of your week.